Hi, you're on a big rock floating in space. In this rock, people really love gambling. Some people like gambling so much that they spend their entire lives trying to find better and more efficient ways to gamble and then lose all their money. That's why we have the stock market. How did we get here? The stock market started in the 1600s. Over in the Netherlands, they were tired of smoking weed and decided to conquer the entire world. They created a private company so that the very rich Dutch guys could build big boats and pay people to travel across the world for spices. These trips were very expensive and also very risky, so even if you were sort of rich, you couldn't even afford to pay for one of these trips. And even if you were really rich, maybe you could actually afford to pay for one of these trips, there was a big chance the trip would fail and you'd lose a bunch of money. So some guys got together and decided to pool their money together to fund the trip. So if the trip failed, they would split the losses amongst each other. Each of them bought a tiny part of the ship, let's say, which made them own a percentage of the entire mission and thus the potential returns the ship would bring back. They've just invented organized gambling, which would later be known as investing. If people believed the trip had lots of potential, the shares of the ship got more expensive. Some people even started selling their share of the ship to other people for a higher price than what they originally bought it for, even when the ship was already gone. Some guy who was part of this big company proposed some changes that he believed would really help the company. The management told him to fuck off and then they kicked him. He got really pissed, so he went to the bank and borrowed a bunch of shares of the company. He immediately sold them to other people because he knew the price was gonna fall eventually if they didn't implement the changes that he had proposed. As the company started doing worse and worse, the price kept falling, so he bought back the shares at a lower price and returned them to the bank, pocketing the difference. However, just like in the stock market today, after he sold, the company went up by 1 billion% over the next 100 years. Tulips are also starting to get really popular. Some virus made flowers have these really cool patterns and now they have become really expensive. They're just a status symbol for rich people though. Wait, something crazy just happened. Poor people now want them too. Flower farmers started growing more tulip bulbs, but they were selling out immediately. People started speculating that these bulbs would be worth more the next year and the year after that. So they started trading tulips like they were stocks of companies. Soon everyone was getting in on the action. Farmers, merchants, even shoemakers were trading with tulips. Prices went through the roof. At the peak of the craziness, a single tulip bulb could cost as much as a luxury house. But here's the thing. Tulips are just flowers. They don't do anything, they don't pay dividends, they don't invent new stuff, they just sit there and look pretty. So when people finally realized that tulips weren't actually worth a mansion, the entire market crashed. Everyone who thought their tulips would go up in price was left holding a worthless tulip that no one wanted to buy from them. Anyways, John and John then created this company. They promised investors insane returns because they were trading through some unexplored routes in South America or something. Spoiler alert, they weren't actually trading with South America. They were just printing stock certificates and hoping no one would check if they were legit. People started pouring their entire life savings into this company because the price just kept going up and up. Someone finally decided to check if these guys were legit, which they weren't. The entire market crashed. This caused a domino effect and it started crashing markets all over the world. Everyone lost their minds. Even Isaac Newton, the guy who invented gravity, even he lost a fortune by this market crash. A couple years later, a bunch of guys in New York decided to create the first ever centralized stock exchange. In 1792, they signed some agreement which set the rules for a centralized stock market. At first, trading was done under a tree, at the street with the wall, but eventually they moved indoors because, weather. Later, they renamed it to the New York Stock Exchange. A slightly better name, I'd say. Good timing too, guys, because the first ever steam-powered textile factory just opened in the US. These new technologies seem really promising, almost like they might cause a revolution. At the heart of this new technology were railroads. They required lots of money to set up, and the financing methods of the time couldn't meet the demand. Railroad companies turned to the stock market to raise money. They started selling stocks on the stock exchange, and everyone wanted them. They sold so many stocks that they could now build large-scale infrastructure projects all over America. This caused a massive tech boom where companies' stock price started flying through the roof. Steel, oil, and all the industrial machines you can think of. Everyone was making lots of money. Some people got insanely rich, like this guy or this guy you might have heard of. Banks got really confident and started investing into very risky stuff. They were holding onto pretty much no cash at all, but it was fine. As long as not too many people were to ask for their money back. Then this guy had a genius plan. He and his family were bankers, and they owned a very large part of this big copper mining company. At the time, many investors were betting against United Copper. They borrowed shares and immediately sold them at the price, hoping to buy them back in the future at a lower price. Otto thought that if he were to start aggressively buying shares of the company, the price would go up really fast, forcing all the people betting against the the company to rush in and cut their losses, which would push the price even higher, otherwise known as a short squeeze. Spoiler alert, his plan didn't work. He thought his enemies were broke, which they weren't, so they just kept borrowing more shares, making their bet bigger. When he realized that his plan had failed, he started dumping all of the stocks he had bought, taking some heavy losses. Many other investors then realized what Otto was doing, and they too started dumping their stocks of United Copper. The price of the stock collapsed. Otto and his bank lost a bunch of money, but it didn't end there. Because his plan had failed, many people who had their money in Otto's bank stopped trusting him with their money. Because, his entire plan didn't work, so maybe he might not be the best to manage everyone's money. So they rushed in to get their money back. Problem is, the bank had no money, so the entire bank collapsed too. This sent a massive shockwave across America. Suddenly, people didn't trust the banks and were asking for their money back everywhere. Of course, other banks also didn't have the money to pay out everyone, and they too started collapsing one by one. This was the Great Panic of 1907. The entire economy was collapsing. But then, JP Morgan, that JP Morgan, stepped in together with a bunch of his rich friends to literally save America from a total financial collapse. They started giving their own money to the banks so they wouldn't collapse. And it worked. The government realized that relying on some rich guys to save the economy wasn't exactly a sustainable plan. So a couple years later, the US government created the Federal Reserve, a bank for banks, a central bank. It was designed to prevent future panics and act as the lender of last resort if all else were to fail again. So that's how we got the Fed, because one guy went gambling and lost. Anyways, the economy recovered and people gained trust in the system again. Regular people started investing in the big companies and everything was going well for the stock market. Green day after green day, just a straight line up. The Dow Jones went up by over 500% in only 8 years, which was unheard of. I'm sure this will keep going on up forever, said everyone. Borrowing was basically free, so everyone was borrowing lots of money to buy more stocks. This is amazing. And then, the US government decided that borrowing should be more expensive. They pulled the plug on the infinite money supply and suddenly the entire market came crashing down. People lost their entire life savings. They were jumping out of windows. They started lining up to get government bread so they literally wouldn't starve, and the economy went into the worst economic period of all time, the Great Depression. The government eventually stepped in and created more rules for this world of gambling to make sure this kind of thing wouldn't happen again. Spoiler alert, it would happen again. A couple years later, the Europeans are doing their thing of fighting each other. Don't worry, they do that all the time. America is not yet part of it, but for the time being, they're getting insanely rich from all of this war stuff. The war was eventually coming to an end, and the Allies got together in this town of the US. They wanted to reinvent the world economy. They thought that this would help prevent future conflicts. They created the Bretton Woods system, which basically said everyone would link their own currency to the US dollar, since, they are rich and literally too big to fail. And then the dollar will be linked to the value of gold. Countries sent all of their gold to New York because dollars were basically as good as gold in this new economy. Countries could now trade freely without having to worry about unstable currencies. Nice, I'm sure the US will be very responsible and not abuse this immense power that we've given them for free. The entire Western world was having a massive post-war economic boom, mostly funded by American tax dollars to prevent them from becoming communist. This was also the era where legendary investor Warren Buffett started out. He became the goat of investing by buying companies and holding them forever. His whole philosophy was be greedy when others are fearful and fearful when others are greedy, which is great advice unless you're a Wall Street bets retard trading on Robinhood. However, the US was spending lots of money during the Cold War or something. They were fighting wars everywhere, funding a space program and doing a bunch of social reforms. Remember, the dollar is still backed up by gold, but to fund all of these expenses, the US was printing more dollars than gold they had in reserves. They printed so much money that countries started getting a little suspicious with the US. Most countries still had dollars instead of gold in their reserves because it was still as good as gold. However, now that their trust in the US was fading, countries started asking for their gold back. France famously sent a couple warships to New York so they would give them their gold back. In 1971, President Nixon was tired of people getting their gold back, so he finally said, "Fuck this," and he completely got rid of the gold standard. This basically meant that the US dollar was no longer backed by gold. Now the dollar was backed by, well, nothing basically, except, the largest military on earth that is bigger than the 4 other biggest militaries combined. Anyways, now we're in the world of fiat currency, where money is worth whatever people think it's worth. It also made the global financial system a lot more flexible, but also a lot more volatile. At first, the markets recovered quickly, and people started liking this new system. Everything started going well for the stock market again, regular people started investing in the big companies, just a straight line up, you know the deal. I'm sure this will keep going on up forever. Then, a war broke out between Israel and all the Middle Eastern countries. The US decides to help out Israel, so all the Middle Eastern countries say, "Fuck you, America, we ain't gonna sell oil to you anymore." And then the entire American economy crashed. Oil prices quadrupled, The S&P fell 50% basically overnight, but surprisingly, the war only lasted 18 days, so the stock market started recovering slowly. And then, second oil crisis. Iran just had a revolution because some people think this guy should have been the other guy, and oil prices doubled overnight again. The government had no choice but to keep printing money to literally keep people alive. They famously started handing out government cheese to shelters because so many people had lost everything. Massive amounts of inflation were already piling up since the first oil crisis, so the US thought, okay, hear me out on this one. We're gonna raise interest so high that people literally can't afford to borrow money. That way inflation must go down, which only made the crisis worse. The US entered the worst economic recession since the one from the 1930s. It took them a while, but by 1987 the stock market recovered to what it was before the whole oil drama that started back in 1973. Took them almost 14 years to recover, except it didn't recover because during 1987 the market fell 25% in one random Monday. That Monday must have been really dark. It was the biggest decline in stock market value that happened in a single day ever. However, it somehow recovered really quickly and the market was up again. Since like the 60s, countries like Thailand, South Korea and Indonesia had been growing like crazy. They borrowed a ton of money to keep this growth going. But around the 90s, China was blowing up on the world stage. They rose so fast that these other countries couldn't keep up and they became less competitive. Foreign companies moved their factories to China, which slowed down the economies of these countries a lot. In 1997, Thailand ran out of foreign money, but they still had a huge debt that had been piling up since the 60s. With no more foreign money, they had no choice but to print lots of their own money to repay the debt. This caused massive inflation and made the Thai currency worth nothing basically. This triggered a domino effect across Asia. Other currencies lost a lot of value as well, stock markets plummeted and companies went bankrupt. The IMF eventually had to step in and save everyone. Also, this new thing called computers are starting to get really popular. This guy who can jump over an office chair says they're gonna be the next big thing. Forget about that guy. The newest season of The Fresh Prince of Bel-Air just dropped. A couple years later, Amazon becomes the biggest online retailer. People realized that this whole new internet thing might actually be something, so they started pouring insane amounts of money into everything internet related. No one really understood it, but it looked legit. If you had a website, you were getting money. Oh, you have a website? Here's some money. Oh, you got a website too? Here's some money. Companies started going public with names like pets.com with no actual business model. But people didn't care. They didn't even understand what they were buying. No one wanted to check if they were legit. The price was going up and that's all that mattered. Shit, this is gonna keep going up forever. Let me go borrow to the bank again and put all my life savings into this. And then someone checked if these companies were legit. Spoiler alert, they weren't legit, and then the entire market crashed. People lost everything. Again, tech companies dropped 75% and an estimated $5 trillion were wiped off the market. Wait, what do you mean wiped off the market? Where does this money go? It just disappeared? Anyways, the market was starting to recover again. Then another crisis. Bro, I'm tired of this market, man. Can't even catch a fucking break. Turns out people were getting free money from the banks to buy insane houses that they definitely couldn't afford. The bank knew these people couldn't buy these houses, but they didn't care. Slowly, some people started realizing that they couldn't pay back the bank and moved out of these huge houses, which they definitely couldn't afford. Now, the bank was left with tons of houses that they didn't want and that no one else wanted to buy from them. It's fine, bro. As long as these other banks don't ask us for their money back, there should be no problem. We'll fix this. Sir, the other banks are asking for their money back.
Fucking shit.
Turns out banks were borrowing from other banks to buy even more houses. And when the banks couldn't sell houses anymore, the price of the houses started falling fast. Banks wanted their money back, but it was too late. The entire housing market crashed. The S&P 500 dropped 50% again, and the crisis spread to the rest of the world. Countries like Spain or Greece that were already struggling with debt and unemployment got hit hard by the crisis. Unemployment went to 25%, construction companies went bankrupt, leaving entire unfinished ghost towns all over Southern Europe. Countries that to this day haven't yet fully recovered from the 2008 financial crisis. The government eventually had to step in with a massive bailout. It was a complete mess for everyone, except for that one guy that predicted it all. He got very rich. Also, the markets are now ruled by algorithms. It's not people anymore shouting on the Wall Street floor. Also, some very deadly virus just spread to the entire world and now no one is allowed to leave their house. Restaurants, airlines, hotels all go bankrupt and it mostly affects small businesses. Government starts printing more money than they've done in the last 200 years and suddenly people realize that printing that much money will cause inflation. Anyways, what the fuck is Bitcoin?